help with tax, don't know what to do. The Brysons are here for you. We know every tip and trick. The serious tax talk with a Louisiana twist.
Well, hello there. It is great to see you again, and welcome back to another installment of Talkin Tax. I am your host and moderator, Ryan Ruff, and as always, we have the stars of our show in Mr. Cary and Miss Angie Bryson of the Bryson Law Firm. And we have a special guest joining us today from the Bryson Law Firm as well, Miss Jessica Thibodeau, one of the attorneys over there. We're going to be diving into all things tax-related issues today, particularly the post-resolution ancillary items that really pop up. So if you've caught our last few live streams or episodes, podcast episodes, whatever you want to call it, if you caught it with us, you know that we've been kind of walking through a deep, kind of tutorial really of the different steps and phases along the overall tax resolution process. We had the discovery meeting, monitoring and compliance. We moved into the tax resolution process, and today we're really rounding things out and these ancillary items. So we're going to be discussing what these are, really how they pertain to given tax related issues, and really how the Bryson's law firm can ultimately assist in getting this wrapped up for you to ultimately get this tax burden, this issue that's been weighing you down in your life, get it out of there, and be able to move on beyond it. So with that being said, let's go ahead and bring the team on and get today's conversation rolling. Cary and Angie, it's good to see you. Jessica, welcome aboard.
Hi, thank you.
Hey, Ryan.
Good morning.
Morning. It's good. Always good to be with you guys. Today, we are diving into post-resolution ancillary items. First and foremost, Cary and Angie, I think it would be helpful for any of our audience out there who maybe a scratch of their head. What the heck is an ancillary item? Give us that high-level overview. What are these things? What are we talking about? And how do they play a role in a tax-related issue?
There are two big ones. There's always ancillary items in any litigation, how to button everything up. But for us, the two big ones are lien relief. How do we handle the lien? We can dive into that a little deeper. And then can we save clients money with penalty abatements? So, which basically arguing before the IRS, hey, look, we're going to pay this tax. We've reached a resolution. So can you help us out with these crazy penalties that have been tacked on to our bill? Those are the two big ones.
Yes.
Yeah. I mean, the lien is always a big one, but penalties are huge as well. So.
Roger that. So it sounds like to me it starts with kind of that first phase in this process, really, and correct me if I'm wrong here, but kind of that submission of the ancillary request. That's where it all begins. When it comes to the client seat, because I know a lot of our conversations are client centric, we want the people out there to know what their involvement looks like in this process. What does a client's involvement look like in that first phase here of the submission of that ancillary request?
I mean, it depends on the ancillary request. I mean, what we're trying to do in this phase is really, as Angie, called it, we're buttoning up the file. We've got to close it up because the IRS, of course, is notorious for, okay, yeah, we'll agree to that penalty abatement, but it never gets implemented. So we got to make sure everything is implemented. So, but at this point, this is when we're going to decide, and we already know pretty much early on from meeting with the client and having discussed with them, and we'll make notes in our files as we go. Well, that was a great penalty abatement. They have a penalty abatement for this year because a hurricane came through, or something happened in their life that would cause them to have a great penalty abatement for that period. Or the lien. The lien is a big struggle with it. We got to be able to move on. We got to be able to borrow money. We got to do this or that. So we know lien relief. We got to address the lien, but that's always going to happen after the resolution is kind of in place and going. Then we'll address these ancillary matters to kind of really finish the file, wrap it up in it, put a nice little bow on it, and get the client back to their life, living the life as they want to live. So.
Sure. Sure. And this is, I mean, hey, at the end of the day, this is the ultimate goal. That's why they sought your help out in the first place, is to get this burden off of their plate. I want to unpack each of these two, factors that you guys mentioned, or ancillary items. The first being penalty abatement. You also mentioned lien relief. Let's start with penalty abatements. For those that maybe aren't as familiar with those overall options for tax resolution that we covered in a prior podcast episode, give me a high level overview. What is a penalty abatement, or an abatement of penalties? Talk us through that, and then really how this comes into play right here as we're kind of nearing the finish line for somebody.
I think Jess could pitch.
Yeah,
We'll
I
pitch
was
it to
about to
her.
say,
She's
Yes,
our
sir.
that's a
our
perfect
expert.
pitch to Jess there.
I've
Okay.
done a lot of penalty abatements here at Bryson Law Firm. I think it's important to kind of understand that a penalty abatement is something that we really don't have to pursue in every case. If our client received some sort of offer in compromise, where we settled the entire tax debt for overall, substantially less, we're really not too concerned with what the penalties and interest are at that point. Or if we were able to resolve the case by, monitoring for expiration dates and the taxpayer ended up not paying their tax balance in full. Those aren't great cases for a penalty abatement. So the most frequent cases that I think we make these requests on are when the taxpayer ends up in an installment agreement, some sort of affordable monthly plan that we've been able to negotiate into place. Um, but they have some reasons as to kind of how they got there, how they fell behind, and that's our opportunity to go and then try and get some savings in that way. There's two different types of penalty abatement. So under the IRS's Fresh Start initiative that you hear about so often, like on radio advertisements and things like that, they have something called a first time penalty abatement. So if a taxpayer has had fantastic compliance history, on all of those prior years and maybe fell on hard times in one year, maybe they had to take money out of their 401k, because they were laid off or, in a financial situation and they owed back taxes, the IRS is usually pretty willing to consider some penalty relief solely on prior compliance. So you really don't have to throw out a lot of different reasons as to why they're entitled to this relief. So I think that's the first one, and really helpful for taxpayers who, like I said, kind of have a very one time isolated tax problem.
Hmm.
Um, any other type of penalty abatement, particularly on multiple tax years, is going to require that you can show the IRS kind of what happened in those years. Like what was going on that caused you to be unable to timely file and or pay on your taxes. And they don't typically have any like bright line definition, like here is your laundry list of the reasons that we are willing to accept it. It's a very broad definition. It's kind of would other people in a similar circumstance, even if exercising all of your necessary and ordinary business care and prudence, have still been rendered unable to tackle their tax obligations timely? Um, I think the big reasons that we often see, in our line of work, is, maybe a close family member passed away, and that family member was sick for a long time. And so, gathering records and getting information was a challenge. Natural
Hmm.
disasters are a really big one for our office.
Yeah.
Like they lost everything in a hurricane or some other type of flood or natural disaster. And we've had our fair share of those over the years. So, that's a big one. Business theft. Unfortunately, we've seen some of those where, a business owner may have been taken advantage of by a bookkeeper or something like that. And a lot of times when we really get into like having the conversation with the client as to the why, it's a combination of a lot of those different things. Like I can think of one where we had a professional and he was very ill and he was traveling to, out of state for treatment. And while all of those things were happening and he wasn't in his office day to day, a bookkeeper was stealing from him and not doing what they were
Mm.
supposed to. So we really kind of have to look at the totality of the circumstances to compile that request to the IRS.
Yeah, it sounds to me, and we've touched on this in so many episodes in the past, Jessica, and you know this. It really comes back to keeping documentation, keeping records, understanding the importance and the weight that they carry in some of these arguments with the, when you're making these requests to the IRS. So good. I appreciate you kind of shedding some light on the fact that, penalty abatements, while yes, they are a strategy, it does take records. It takes that documentation. It also takes a unique set of circumstances to help you get that granted for you. It's the one-off tax issue isn't necessarily gonna, help you qualify really for that penalty abatement. So we've got penalty abatements there on the one end when it comes to the ancillary items, but on the second side, you guys mentioned lien relief, and I know liens and levies. We had a whole episode just diving into liens and levies in the past because there's a lot to unpack within them. But Brysons, let me throw this over to you here. Give us a high level overview on what we're talking about here with a lien for those who are unfamiliar with it, and just why this is such an issue that can be presented in somebody's life if one gets put on them.
I, I, for me, liens, people need to understand that a lien is the IRS's way of protecting its interest, essentially, in your mostly your basically your immovable property. So your house, land, things that people associate with a set necessary, mostly a mortgage. So it's like the IRS is taking a mortgage. In most circumstances, you give the person, like a lender, a mortgage, but they go and take it. Um, they are the super creditor. So once the IRS files that lien, it is a passive way. And this is the big difference, kind of to circle back on the levy lien issue. It's a passive way for them to say, hey, Angie Bryson owes taxes, and she's not going to be able to sell this piece of property or whatever property is located in that parish or county. If you're not a Louisiana resident, you can't sell that property without handling the lien. So it's a passive way to protect their interest and to preserve their position, so you don't go borrow money and let somebody, another lender, leapfrog them. That's the big takeaway. It's passive. So we get a lot of calls where people say, "Oh, am I going to lose my house? The IRS filed a lien." I mean, in theory, you can, but in practicality, no. But it is just a way for them to protect the interest of the IRS. And so, as an ancillary matter, we've got to look at that and see if we can assist our clients with getting the lien removed, or at least advising them on what that lien would mean for them at the end of their resolution process. So, and I mean, I'll let Cary talk a little bit more about the complexity of that. It's not always an option.
Or necessary.
Well,
Yeah.
are
Well,
necessary.
it's rarely. I mean,
Mhm.
it's kind of actually rarely an option once the lien's in place.
Right.
There are certain resolution options where potentially you could get a lien removal, and if that's the client's desire, I mean, if that's their pressure point or their pain point is that lien is causing their business to not be able to operate correctly, then maybe we have to focus on more of that type relief for them, which may require them, because
Undoubtedly.
there's certain programs you got, if you only owe
Sure.
certain, you can get the lien off. So they may have to buy it down, pay the liability down a little bit before we can put them into that certain type of installment agreement to get the lien off. So yeah, I mean, it's all got to be considered. But did I answer your question? I don't know what question you want
Yeah.
to
No. I mean, think
answer.
I think managing expectations with regard to liens, and we do this a lot. We as attorneys, and really no one, and we tell our clients this from the get go. I know we can all vouch for this. We really have no control or predictability on when or if the IRS is going to file a lien. I mean, it honestly, sometimes, Karen and I looked at 2 or 3 files yesterday, active files, and the clients owe taxes from way back, like, early 2000s, and significant, dollars, and no lien is filed. I mean, and it's never been filed. And so it's not an issue for these clients. However, if we jump in and start moving the file around, it may prompt the IRS to file a lien. So
Mm.
those are things to be mindful of. It's not an ancillary item in the sense that we're wrapping up the file, but it is something we consider while we're working on the file. But the other thing is, once it's filed, we've got to advise our clients, okay, you're going to be in a payment plan, and look, the lien's going to stay here until you get the balance to a certain amount, and then we can
Mhm.
request removal.
Right, right. That was my next question was like, what does it take to really get that lien removed? Because I mean, hey, it can work its way onto your credit report. It can inhibit you from doing things, big things in your life. So yeah, how do you get rid of a lien?
Well, I mean, there are a couple of ways to get rid of it through just a pure lien removal process. I mean, obviously, you could pay the tax on that the on the account of the year that's subject to the lien. They can pay that lien, that tax. Obviously, if you pay it, they're going to take it off. They should, and sometimes they don't. And you have to go through process to get it off. You can also ask the IRS to subordinate, which is to subordinate the lien. But maybe you want to borrow money on this piece of property. But usually, when you do that, the IRS it's with the understanding that that's part of the resolution process. That the money that you're going to get on the loan from that property is going to go to the IRS. So they will reduce their lien, or they'll keep the lien, but they'll reduce it to the bank who's going to loan the money. And like I said, the withdrawal process is if once the balance gets to a certain amount, the taxpayers are entitled to go get the lien to ask that it be taken off if they're in compliance and they're paying their deals. So there are ways to get it off, but you know, in no way would I ever tell anybody that this is an easy process. This is kind of very
Right.
hard. If you have a bunch of property, you could substitute other property for the lien. And say, in other words, I'll give you, but it usually takes 3 times the value. So I'll give you these 3 properties over here. You can put liens on them to get this one clear. And I don't
Right. But
honestly, I don't know many people who really want to do that.
right. Or many people that might have 5 other properties lying around.
Right.
Right.
So that are free and clear. Yes. So
Sure.
so anyway, that there are ways, but it's rare. I mean, and it's hard.
Mhm.
And nobody, including the IRS, is really wanting to give you this. I mean, it's not like something that they just, oh yeah, sure, we'll take our lien off. That's just
Mhm.
it's not going to happen.
I think it's
Sure.
important
Sure.
to talk about, like, notice, and we get a maybe
Uh-huh.
you can shed some light on this too, because we get a lot of people who say, "Well, I didn't know I had a tax lien. Well, they never gave me a letter, they never notified me." Um, and I know that we speak to clients daily about that, and even potential clients. So,
Well, first, before we go to Jess, I'd like to point out at the lien, and it is a very common misconception.
mhm.
Actually, the law provides that the lien arises the
You're
moment,
gonna get technical now,
yeah,
huh?
the moment the taxpayer,
Oh,
no, it's one thing I can remember, I guess. The lien arises the moment the taxpayer has a liability. So the actual filing of the lien in the
right.
courthouse is just for notice for third parties. So when somebody comes into my office, they already have a lien. If they have a tax liability, they already have a lien, even though it may not be recorded at the courthouse. The lien is in place. So what does that mean with respect to third parties? It's not valid. But so technically the lien is already there. But anyway, go ahead, Jess.
Mhm.
That's true.
It's one thing I can remember, so I had to tell you.
Yeah,
Yeah.
so is your question for me about when they file it, or kind of my
Yeah,
thoughts on when it really becomes an ancillary issue for a taxpayer?
both. I think, to kinda jump off of what Carrie said, why do clients not get notice or feel like they have proper notice? What does that look like and, present itself? So at the end of the day, a lot of clients wanna argue that to the IRS, "Well, you never gave me notice." Um,
Right, yes.
yeah.
Yeah, what we typically see a lot is that the IRS files a lien and they're going to send certified mail to the last known address that they have. So sometimes with some of our clients, they haven't filed a return in 5 years, and so the last known address that the IRS has is whatever was listed on that return 6 years ago. And so I think the IRS has to try to send you notice, but they really don't need to prove that you received that notice and are officially on notice. They had to attempt to put you on
Mhm.
notice. So I think that's a lot of times, or other times, maybe like the IRS issue is so big that they're getting certified mail left and right and probably not opening it or not really understanding what it means. So I think that's usually when we see the questions or the issues about, did I even know about this?
Mhm.
Honestly, in our experience, I have found that the more common way that people know they have a lien is the junk mail that they get from some of those national tax relief companies that pretend to
Mm.
be tax liens, or look really close to a tax lien.
Sure.
I think Angie and Carrie, you guys have probably spoken to clients who said the same thing, like, I didn't really know this was happening, but then my inbox, in the mailbox was flooded with all of these different companies telling me they could do all of these different things. So I think, if the IRS didn't put you on notice, I'd be surprised if some of those national tax marketing relief companies did not.
Right.
Um,
Right.
and we get a lot of people who bring in copies of these letters that look like liens, like, if you don't have the trained eye to
Mhm.
know, like, this is not from the IRS, like a lot of them truly look like they're coming from a legitimate taxing authority. So
Mhm.
I think that's usually what we see as far as people being put on notice, right, guys?
Yeah, and
Absolutely.
to reiterate the point that Jess made, it was very important because I deal with it all the time. The IRS notice requirement is proof of mailing. So all the
That's it.
IRS has to do is show they mailed it. They don't have to show that you received it, you read it, or anything. Unlike any other case in law, you have to prove receipt.
Yeah.
Don't have to prove receipt. All they have to prove
Wow.
is mailing, which is that's very easy to do. I mailed it. And then it's
Sure.
what
Definitely.
address. It's like Jess said, to what address? Well, it's the last address on the record. So if you haven't filed a tax return and you lived, 5 years ago, you lived on Oak Street
Mm.
and now you live on Elm Street, well,
Yeah.
if you mailed it to Oak Street, that's fine.
Yep.
So
Right.
it is,
Yeah.
it's a very hard thing to say that, oh, I didn't get it. Well, that's not
Sure.
something that you're going to really
So
write about.
that first phase here is that submission of the ancillary request, whether it be that penalty abatement process or the lien relief that maybe you guys are going after for a given client. But then phase two of this process hits, and that's what can always be the favorite part of everybody, the legal negotiations. So once that request is made and you guys are going back and forth with the IRS, Cary, you had mentioned earlier that sometimes you make a request, they approve it, but it's not even enacted. You've got to make sure that it is in fact enacted, and the abatements are coming through. So talk to us about this legal negotiations phase. Really, what is the final thing that a client has to go through before they can move beyond this tax related issue in their life? What do these final legal negotiations look like?
I can
Well,
kind of take that one if you guys want me to.
yeah, that's fine. Go ahead.
Um, I think, again, similar to a penalty abatement, it's not always necessary. So I think it's important to know that not every case requires any of these ancillary items. These are kind of those
Mm,
extras.
sure.
Um, but in the negotiation process, and it differs depending on the type of request you make. Like if you're making a lien release request because you're going to pay the balance in full, it's really as simple as getting the funds. A lot of times we recommend it be certified funds to expedite the process and things like that. Remitting the funds and making sure that we get a lien release, from the
Hmm.
IRS. So, that looks a little bit different than if we're doing some type of lien subordination request. You're having to provide documentation that whether it be that you're trying to pull equity out, that you're going to pay that to the IRS, or if you're trying to refinance to get maybe a lower interest rate and reduce your monthly payments, that's going to mean that you can pay more money to the IRS per month every month. So in lien subordination requests or lien discharge requests, you really have to show the IRS that it's going to benefit them to do those things.
Hmm.
So it really requires, similar to like you mentioned before with the penalty abatement, a lot of documentation. So we're working collaboratively often with the mortgage lender that the taxpayer may be working with, or the realtor that the taxpayer may be working with, to get all that information and compile that request, and use it in our negotiation efforts. Wouldn't you guys agree?
Hmm.
Yeah, I mean, I was focusing, honing in more on the penalty abatement process. So, liens are pretty cut and dry in the sense that, we kind of know the next steps and can predict very clearly what's going to happen because of the nature of just the lien, the way the Irish treats liens. But and it's more objective. But so penalty abatements are a little more gray in the sense that you're basically pleading a case, and we try to put a lot of emotion into those for our clients because I think that's where a lot of practitioners miss the mark, and lawyers are particularly trained to prove a case, right? So we know that if we're going to argue that, um, Cary lost his records in a hurricane, and then he lost his business, and then his all of his records flooded, and then his wife got sick, or he was taking care of a parent. We know that to bolster that claim that we would produce, the declaration disaster from the IRS, pictures of the flood, medical records contemporaneous with the tax period showing the illness. So we would put all of that together, like, and create the story make the submission. But I mean, basically 9 out of 10 of those submissions get denied. I would say at least 90%. The first response we get is, "Oh, it's gonna take us a long time, 120 days to at least, a year." Then it gets denied, and then we have to appeal. So, as part of the process, we've got to babysit the file, make sure it doesn't get something doesn't go weird, paperwork wise, and then we get the denial letter, which is basically what we're expecting most of the time, and then we perfect the appeal timely. And really, where we get the most traction is on appeals, and
Hmm.
those are the folks that have the better, more discretion, and we're able to negotiate more with. So, in terms of what that process looks like, it's make a good record, submit some good proof, and Jess is really good at that. I mean, she has done some great work for us there, and then make sure that we watch it so that we don't miss the appeal deadline.
And
Hmm.
Um,
and point out,
That's
I would say it's not quick. It's a ve
slow
so,
boat.
yes.
It
you know,
is a slow boat.
I mean, because most people are dealing not with a revenue
Yeah.
officer. I mean, if it's not with a revenue officer, I mean, I'm talking years, not months. I mean, this is a process.
They get lost.
Yes, and then, like Angie said, you can expect it to come back after 2 years denied,
Yeah.
with very little explanation, and then you gotta appeal, and then you start really so it's a very long process. I don't want anybody thinking
Hmm.
it's something you do really quick here.
Right.
Um,
Sure,
yeah,
sure. And
That is a great point. And in my experience, the appeals is really the only place where you're going to actually get to speak to someone at the IRS. Like a lot of the initial request is via mail, like here's our request, like no, yes or no. You get that initially. Sometimes they say yes, it's rare, like Angie said. Most of the time you're going to have to appeal, but I,
mhm.
I prefer to argue a penalty abatement on appeals. I want to have a conversation with someone at the IRS to truly plead
Yeah.
the client's case, make sure they reviewed all the records and really understand what happened. Yeah,
Mhm.
that's a good thing to add about
Well,
appeals.
yeah, absolutely. And guys, one big thing and take home for anybody in our audience is as we've been going through, cover to cover on really the tax resolution process as a whole that you guys offer and really work through on a day-to-day basis over at the Bryson Law Firm. One thing that's been a common thread is boy, does it help to have a professional in your corner. I mean, there's a lot of steps, very methodical actions that need to be taken throughout this process to finally get this tax burden, this tax related issue off your back. So when you take that shot, let's make sure you do it right and have that professional in your corner. And that's been a common thread I think that we've been, really seeing throughout this entire process. So that being said, if anybody out in our audience is, they're listening to this conversation around ancillary items thinking, "Man, I thought we were done. But, oh, now there's this one other thing we got to go through." And maybe they're thinking about I really don't have the bandwidth myself to be able to tackle this issue. I need help doing it. What would you guys say is the best way that anybody out there should reach out to your office just to get a conversation started to see if maybe there's a fit there and you guys can help them get that tax related issue that maybe they've been putting off for years finally off their plate? What would be the best way they could reach out to you guys?
I was waiting for Jess to answer.
Yeah,
I would go to
we
Bryson.
have so many different ways you can reach out to us here at Bryson Law Firm. I mean, we
I would
try
hit
and
the
be
hit the website.
we try and be so accessible as possible. You can, of course, call us at any of our office numbers, which are on our website. You can website chat us. You can send us an email through our website. I would say whatever's comfortable for the person who's dealing with the tax problem, reach out in that way because we have a plethora of different ways to contact us. We'll get back with you right away. And we love to sit down and have an initial consultation, which we do not charge for. We offer free consultations and we're happy to sit down and kind of go over what your needs are and what your goals are and see if we can't be a good fit to kind of assist you in executing on those moving forward.
I mean, I
Fantastic.
will say that too. Just if we don't feel like, and I know I speak for Cary, just if we don't feel like we can help someone, or it's they can do it on their own, or we can get kind of guide them in a better way. We do tell people that we're not going to onboard a client that can doesn't really need our assistance. I mean, of course,
Mhm.
we can help everyone, but we've got to understand the value to those clients. So
Sure.
rest assured that you're going to get good advice, and even in your free consultation, and honest transparency from our team.
Yeah. And we may not have all the answers in the consultation, but we'll have a plan. And I think that's the perfect first start. And I think that honestly is enough comfort for a client, to know like, okay, there's a plan. There's a way out of this situation that I'm in.
Awesome. Well, guys, look, I appreciate you all taking some time out of your busy days. Cary and Angie, you got a company to run. Jessica, you got clients to serve. Appreciate you guys being with us to talk about these ancillary items, really this final step in the overall tax resolution process. And I'm looking forward to having you guys back on, and Jessica, maybe again for a future episode.
You never know.
Awesome. Well,
Come on, I'd like to throw out one little tax tip though, because we were talking about
let's do it.
it popped up in my head. So, and one of the points that Angie said was, if you could do something yourself, certainly. I mean, I have several cases like, look, you can do this one yourself. You don't need us to do it.
Sure.
But we were talking about penalty abatements, and we spent a lot of time on reasonable cost penalty abatement. And Jess mentioned early on that there's two kinds. There's the first time penalty abatement, but we didn't spend a lot of time talking about that one. And that's something that it's under that initiative. And people really don't know that, every U.S. taxpayer has this one-time, one-shot penalty abatement that they can use for anything. And it sounds great, but a lot of times I'll caution you. I mean, and it is a great thing. Don't get me wrong, but be careful. Use it wisely. And that's because it is only one time. You're only going to get one shot at this thing. So don't go. I wouldn't necessarily recommend waiving or getting a $5 penalty waived. You may want to keep that in your back pocket for $5. Would be my first little tax tip. Just use it wisely. And secondly, when you do use it, make sure if you're the one on the phone, you make absolutely sure that you pick the penalty and you pick the time.
Yeah.
Yes, because if you just say, I want to use my penalty abatement, the IRS is going to go find the lowest penalty, that 30-cent penalty that they have on your account, and they're going to use it for there, and then it's gone forever. Once they use it, it's used. So you just make you get your highest penalty, and then you use it, because it's not all the penalties for 1 year. It's only going to be one type, one penalty. It's only one penalty. So you just got to know that.
And that's a great
little tax tip. Just be.
That's a great point, Cary. Yeah. And you also have to be mindful of time, right? Like, penalties and interest continue to accrue until someone's balance is zero. So if you request it today, they're going to waive the late filing penalties you have on your account today, or the late payment penalties that you have on your account today. So there's like kind of a time, thing that we like to gauge when we make it. So that's a great point, Cary. And to add to that, yeah, it's nice to have a professional who can look at it holistically and say, here's the year we want to request it for, but we don't want to do that until here, this day, or when this happens.
Yeah, right. Again, one final time comes back to having a professional in your corner to help you through and make some of these calculated decisions and strategies with you. So, guys, look, again, appreciate you all and your time jumping through this stuff today. We'll leave you with that tax tip to our audience, but you guys take it easy and have a good one today. All right.
Yep.
You're right.
Happy Easter to everybody.
Indeed. And look, we want to take one final moment and thank you guys, our audience, as always, for jumping aboard, being with us here on the live stream or the podcast episode today. Do us a favor. If you liked what you saw, you benefited from anything that was discussed today on the show, hit that like button. Go ahead and leave us a comment below. Share this information with friends or family, anybody that really would benefit from these types of tax-related discussions, because at the end of the day, we're trying to bring those same strategies and solutions that the Brysons are using on a regular basis and bring them right to you on this show here. So we've got some great conversations teed up for some future episodes, and we would hate to have you miss out on any of those. So for the Brysons and for Jessica, I'm Ryan Ruff. We're going to go ahead and say so long today, but we appreciate you one final time being with us here on today's episode of Talkin Tax.